The Goods and Services Tax, or GST, marked a significant change in India's tax system. Implemented in 2017, GST replaced multiple indirect taxes, creating a unified tax structure. This new system impacts everyone, including housing societies in Maharashtra. Understanding GST is crucial for societies to manage their finances effectively and comply with regulations. Previously, societies navigated a complex web of service taxes and VAT. GST brought in a simpler system, but it also introduced new rules and compliance requirements. This essay will guide you through the essential aspects of GST applicable to housing societies in Maharashtra. One of the primary concerns for housing societies is determining when GST applies. Societies need to understand the annual turnover thresholds that trigger GST registration. Currently, if a society's aggregate turnover from supplying taxable services exceeds 20 lakhs in a financial year, it needs to register under GST. The GST rates for services provided by housing societies vary. For example, maintenance charges up to 7,500 rupees per month per member are exempt from GST. However, charges exceeding this limit attract an 18% GST. Understanding these nuances is crucial for accurate accounting and financial planning. There are specific exemptions available for housing societies. For instance, contributions made by members for capital expenses are not subject to GST. However, it's essential to maintain proper documentation and records to substantiate these exemptions during audits. Input tax credit, or ITC, is a vital aspect of GST that allows societies to reduce their tax liability. Societies can claim credit for the GST paid on goods and services used for providing taxable services. For example, GST paid on materials used for building repairs can be claimed as ITC. Once a housing society's turnover crosses the threshold, it is required to register under GST. This involves obtaining a unique GSTN, or Goods and Services Tax Identification Number. After registration, societies need to file regular GST returns, detailing their income and expenses. The frequency of filing depends on the turnover, with larger societies required to file monthly returns. Additionally, societies must maintain accurate records of all transactions, invoices, and GST payments. Non-compliance with GST regulations can lead to penalties and legal complications. It's crucial for societies to understand their compliance obligations and implement proper accounting and record-keeping systems. Managing GST effectively requires a proactive approach. Here are some practical tips for housing societies. Educate yourself. Stay updated on GST rules and regulations relevant to housing societies. Attend workshops or consult with tax professionals to clarify doubts. Maintain accurate records. Implement a robust accounting system to track income, expenses, GST payments, and ITC claims. This will simplify GST filing and ensure compliance. Leverage technology. Utilize accounting software or online platforms that offer GST compliance features. This can automate many tasks and reduce the risk of errors. Seek professional assistance. If needed, don't hesitate to consult with a tax expert or chartered accountant. They can provide personalized guidance and help you navigate the complexities of GST. By understanding the nuances of GST and implementing these practical tips, housing societies in Maharashtra can ensure compliance and manage their finances efficiently.